Oracle Investments. I just want to take a quick minute to thank you all. You give me, in the week that I've really been doing this channel steadily, you have given me more and better feedback, constructive criticism, any criticism at all, any feedback than my full-time job has in 7.5 years. So I thank you all for the feedback and the comments. It has really been a huge positive for me in trying to grow this channel. So thank you very much for that. So today we're going to discuss Gene Munster here. Gene Munster talking about Tesla, big bull, hitting that $1 trillion mark, and then why being over $1,000 is sustainable and why it's going to continue growing and what's not being priced in.
Gene, I know you love Tesla, but what is not being priced into the stock with the stock north of $1,000 right now?
The sustainability of what's happened, I think BKU said fundamentals don't matter. I think fundamentals matter very much. I understand your point, but I think that the sustainability of the fundamentals, the strength of fundamentals is what's not being priced in. And
so basically what Gene is talking about here is the fundamentals and the fundamental difference between like a Tesla on this upward trajectory and a traditional, momentum stock. Momentum stocks ride this huge wave up based upon just emotions and a bunch of people just piling in there because it's the hot stock. And with Tesla, it's the hot stock, but it's because it's backed by strong fundamentals that are continually growing, and that foundation keeps getting supported so that upward momentum is supported. And that's what Gene is talking about here.
I step back and say, don't know what the stock's going to do over the next 6 months. Hard to predict that. But if you just look at the trajectory and think about what the value of Hertz, I appreciate your comments, Melissa, about getting these cars in consumers' hands and then they buy them, they experience it, they buy it. But I think that sustainability is not reflected.
So for anyone else who out there follows any other stocks in the stock market, which I would imagine many of you do, you'll know that when it comes to like momentum plays, some news comes out and there's a huge explosion in the stock price, goes way up, and then it fades down quickly thereafter. And those of you who saw yesterday, the stock price for Tesla, dipped a little bit, but of course there's going to be a little bit of profit taking. And don't forget, in the morning, the price shot up to almost $1,100. So then it came down. Totally normal. But the important part is that it's still held right near where the close was the day of the announcement. And so closing 2 days in a row after the news is what's important, because that is where the sustainability comes in. Some companies have this news that comes out, hey, awesome news, but what's the real long-term effect of that news? And when it comes to the Hertz news, that long-term effect means actually even more exponential growth in the future. So it's not just a one-time hit and hit and go, hit and run. It's, this is going to be cool. This is here. And this one-time news is going to continue to grow over time.
Now I want to just quick put some numbers around that. Their current share in the U.S. is around 65%. Globally, it's less. And I've always thought that they're going to gravitate to 20% share eventually, 10 years from now, of the car market. And that's more than any car maker has today, but it's a far cry from 65.
And this right here is the major difference between bears and bulls when they talk about market share. Gene here is explaining how 65%, Tesla has 65% of the market share, and he's expecting it to come down to 20%. 65% realistically is unsustainable for anybody. But the way he talks about it is the global car market share, not EV market, the car market, because he knows that we're going towards that. So that is the big difference between bears and bulls. Bears talk about it as the EV market. Bulls talk about it as the car market.
What you see these screws getting turned down with the Hertz announcement, I think that this number could be more than 20%. That would imply about 17 million vehicles a year. They're at 1 million today.
One of the other things I like about Gene is he's a bull, but he's realistic. You know, he's not one of these hyper bulls that's out there, although some people may say he is. But you know, he sees this Hertz trajectory and where it's taking us, and you know, it's like, all right, well, we could actually have more than 20%. You know, his base case was 20%, but seeing what this Hertz deal implies going forward, getting into other rental car places, companies also picking up Teslas and other EVs. It's not just about the Tesla adoption, it's about the EV adoption, because the more EVs get adopted by everyone, the more market there is for Tesla to grow in. And that's why it's important for Tesla to be, you know, Elon to be encouraging Volkswagen to push their company forward with the EVs and help them, because if they can expand their EV market, which is the largest car market in the world, then that's going to open up the EV market for Tesla to grow in as well. Hugely important there. And again, as we push up, you know, to 17 million vehicles, as Gene is saying, you know, that is just an exponential growth. Thinking if we're at 1 million today, and even if it's 10 years to get to 17 million, that's a 17x in deliveries. That's a lot in 10 years.
So I think that this conversation we're having, we're going to keep having it. And the stock is going to be down some quarters, more quarters it's going to be up.
And this is just your little reminder from Gene for anybody whose conviction might waver when Tesla's stock is down and in the red. It's going to be down some quarters. Tesla's going to have red days. It can't be green every day. It's actually healthy to have some days that are red. It's healthy to have some longer stretches, like we had a sideways trading for the majority of this year. That is good. That is healthy. If you're playing this stock and you're playing Tesla long term, let there be red quarters. When you're having red quarters, that's when you buy more. That's it. So don't lose your conviction just because Tesla's going red. Red's a good thing.
And we're going to wonder when it's going to end. So I want to try to fast forward to the end of where I think that this plays out. Is if you look at, they're going to do 70 billion next year in revenue. I think by 2027, a long time from now, they'll do 400 billion. You put a 6.5 revenue multiple, hardware, software, services, you get to 2,500. That's a big jump from where we're at today. But I think we're just going to keep chopping our way up. Could be wrong. Competition could catch me, surprise me. But I think this is one that just has really a decade of a tailwind to it that is, even at these valuations, can create value for investors.
There you go, Oracles. Just in case you were wondering, do I buy Tesla at all-time highs? Yes. Personally, I dollar cost average because the price is going to constantly go up and down. But think about it this way. Gene is saying he's expecting it to be by 2027, $2,500 stock. That is more than 2x. That's basically a 2.5x from where we're at today. If in 7 years, you're looking back at a stock that's $2,500, would $1,000 seem relatively inexpensive? Yes. So you got to ask yourself how you're playing this. You playing short-term trading, or are you playing long-term investment? If you're playing long-term investment, just keep on buying. It is always a good thing to dollar cost average, and I just invest daily. I put $8 into Tesla every single day, and then I invest more when it goes red. I invest even more when there's bigger red days, and I just keep dumping money into it. And then every once in a while, I save up enough to buy a whole nother share. And I'll be having that coming up pretty soon. So just keep on investing and hold.
Hey, Gene, Tim, so I can't argue with that. And I kind of agree with at least some part of your top line growth, but this is not really a tech company then. It's back to the auto company argument. And at least if you look at the operating margin for producing this car, it doesn't warrant, even at the type of growth you're talking about, even north of 20% market share, and I think the competitive landscape. So please push back on that, because you've been steadfast here, you've been right, and I'm having trouble looking at the valuation.
So the car, everything I outlined is correct. We're talking about cars, and then and a sentence later I'll say it's more than a car company. I'm take more of a philosophical approach to this and say whether it is in the form of a car or it's in the form of a phone or it's in the form of some sort of advertising revenue. I'm trying to focus in on which products can have the highest sustainable growth and what are their profitability characteristics. And so I think that eventually over time, more than half of Tesla's revenue is going to be car related. It's 100% basically right now. But I see this as just kind of looking at the core. Can they get to 40% gross margin? It was called 30% last quarter. Can they get to 40%? And if they keep growing at 50%, do people even really care whether it's called a car company or a phone company? They just want earnings power, and I think that absent some surprises in competition, they're going to keep delivering it.
See, I think that was a fair question. Like, are we valuing it as a car company or as a tech company, or what do we value it at? And Gene is like, you know what? I'm valuing it as a future company because what different streams of revenue do we have? And as Elon and everybody talks about over at Tesla, it's really just a phone on wheels. This is not just a car. Imagine having your Droid or your iPhone with wheels and you're driving it around. That's literally what this is. And there's so many different streams of revenue you can get from that and a car company. So, merged together those two, if you had like Apple and GM together, sorry, I used GM as an example for this, but okay, so Apple and Volkswagen, merge them together, what do you have for a company? What do you call that company? You can't. You call it a Tesla. That's what you call it. And so we are now valuing a Tesla company. And maybe in the future, we'll look at companies down the road and be like, oh, they're a Tesla type company versus they're a phone company or they're a car company. And let's not forget that Tesla also has their solar, insurance. These are a lot of things that even Gene's $2,500 price target, he's barely even factoring those in. He's just going by the top 3 things that he can see revenue streams coming from. So, I mean, he's a semi-conservative bull if you think about it.
Hey, Gene, it's BK. So let me ask you, just put a $2,500, I mean, roughly, you didn't put a price target on it, but you said if you put a 6 multiple on it, you can get the $2,500. I happen to think maybe that probably gets there sooner than we think. Let's say it gets there within the next quarter or 2, which I think is a possibility. Do you then sell it, and then does that turn you bearish?
Yeah, I think I would sell it if it got to 2,500 in let's say a month. That's just too much, too fast. You could argue that at where it's at today. But
while I know we would all love to see Tesla at $2,500 in the next month or two, even Elon would tell you to sell your stock at $2,500 if it hit there in the next month or two. Elon even says little things like, he wasn't expecting that much of a growth spurt in the stock because of the Hertz news, because there's a supply issue, not a demand issue when it comes to Tesla right now. So it's like, I think Elon says a lot of little things like this that I hear between tweets and interviews that he does to try and cool the stock off, because he knows the upward trajectory that we're on. And he doesn't want it to grow too fast, because if it does, then it's blown through its gates where it needs to be, sort of like it did last year when it hit $900 in January and it needed to cool off for some time. It's going to happen. But no, Gene is right. If it hits that $2,500 mark in the next couple of months, it will definitely be time to take some profits and let it cool off, because it's going to come back down.
There has to be some sort of a framework around this. And what I'm talking about is 2017. I'm talking about like a 3-5 year price target to double. That would be a great return under typical investment. But if we got there in a short amount of time, I do. So I think I would stick to the discipline and think about how much is getting priced in. And that would be too far, too fast for me. And I would be selling at 2,500.
See, I appreciate this about Gene, because he's very similar to like a Cathie Wood approach, which is, if the fundamentals are there to support the price growing at that rate, have at it. He does not see that. Similar to where Kathy says, if it hit $3,000 next year, that is too much too fast. And, you've got to take a step back and see where they're at. There's only so much future growth you want to price into the stock at one time. And we're priced out pretty far, but I still think it's relatively conservative with everything Tesla has going for them. But still, $2,500 for the next year. But still, he's saying $2,500 in the next 3 to 5 years. That's still very significant growth, and that is based off of a smaller fundamental foundation that he's got underneath it. So if you get the small foundation fundamentals underneath it to $2,500, when you start thinking about all the other things Tesla has to offer, we realistically could be closer to where Kathy's base case is of $3,000 in the next 4 to 5 years, and potentially more because there's so much more that we don't even know about.
All right, Gene, great to speak with you. Always good to get your insights, especially on Tesla. Gene Munster of Loop. Brian Kelly, you got to go back to you because I feel like we're going to rewind and play this appearance. You think 2,500 could be actually in the next couple of quarters, and yet you want to clean out your drawer? I'd keep that sucker in the drawer. If you, if you really thought it was going to go that high in a couple of quarters, why not keep it in that drawer?
So, fair point. I have not explained my drawer policy well at all this evening. So let me explain it. I have taken the shares out of the drawer. I am not selling it. But I think in the next quarter or two, it would not surprise me if it doubles, and then I would be selling it with both hands.
Hey, fair point here, for people who aren't, diehard Tesla holders long term. If this stock doubles in the next quarter, sell it. There's nothing wrong with that, taking some profits. If you sold it, it realistically would come back down. Who knows what happens? Nobody's going to know what's going to happen with the stock in the future. It could double and then double again the quarter after. Realistically, fundamentally, that shouldn't happen based on the current trajectory. So if that is the case, sell it, wait for it to come back down, make those profits, and then buy back in with some more. It is a viable approach to this, but he's being realistic because honestly, the growth trajectory we're on couldn't sustain $2,500 in the next quarter, although it would be really awesome to see.
That is quite a call. Steve Grasso, could you be on board?
Oh, well, if it gets to 2,500 in that ludicrous speed, basically, then you would have to sell it. But what Gene didn't mention, but he mentioned the other night, was the full self-drive software subscriptions, and that's between $7,000 and $10,000. That's another huge tailwind for the company. Energy storage, battery, it's a very small percentage of overall revenue now. Mm-hmm. It's ticking up. So it almost reminds me of Apple, and then you have the software and everything else and services on top of that with Apple. So I think, yes, I'm on board with Brian cleaning out his draws at 2,500, even though there's nothing in there right now. I think that the stock, what was the price target Kathy Wood had on it? 3,000? So, yeah, I think we're all on the same page. Velocity is key on how quick we get there.
All right.
It's always great to see bulls having a conversation, sort of like a lot of us in here. I love this. And it's good to keep a level head. You want to get excited about the stock and the future of Tesla, and I think it is unlimited. But you still want to keep yourself grounded and keep yourself realistic. And, he's the Kathy Wood, mentality of the growth of this stock and this company is starting to become the norm. Her bear case is starting to become the base case or bull case for other people, which she was so far off from so many other people before. Everybody's like, oh, she's crazy. But now a lot of people are starting to turn around and be like, you know what? Maybe she ain't so crazy. Now let's see what the head shaker has to say.
I shall end this block with a question for Tim Seymour. Which do we see first in Tesla, 500 or 2,500?
Oh, boy. Good one. Good would you rather. Look, I think ultimately 2,500 is probably where it can go. But it's not in the next quarter or two. And the stock is way overbought. And the valuation makes less sense today than it did yesterday. I think the balance sheet of this company, their ability to get their production right, the fact that it's been profitable now for 3 quarters straight, makes it a lot harder for me to go for the 500 that I would have said, 3 months ago. So there's my answer.
Honestly, hey, he's got the same name as me, and I respect his answer. You can tell he's a bear, but you can tell that he is genuinely giving respect to Tesla and the company and what they have accomplished. And, even for a guy who is clearly bearish, saying that, what, while the valuation he feels is high right now, $500 is less realistic than $2,500. Although that question was kind of an absurd question because, neither really is a realistic place for the stock to be in a quarter. He's still favoring the bullish side, despite the fact that he's more of a bear. So I gotta say, there aren't many bears left out there. Yeah, it's just, we're seeing it all go in this direction. It is a good time to be a Tesla stock holder. Thank you everyone for being here today. I apologize if you hear some noise. We have a nor'easter coming through with some high winds, and I'm trying to be quiet because I have neighbors upstairs. So thank you all for watching. If you have not subscribed, please do so. Like this if you enjoyed the content in here. Let me know if there's anything else you would like to see. And also take a look in the description. I have my son who, I invest in public.com, and it's just Tesla stock. I work with him. I put in $5 every time he scores a goal in soccer. Every time he gets an A, I put another $5 in. Every time he improves a grade that needs to be improved, I put another $5 in. And if you sign up with public.com in the link below, you'll get yourself up to $70 worth of free stock, and we will get the same as well to put into his future fund. So if you'd like to do that, go right ahead. Otherwise, you are all awesome. Thank you so much, and we'll see you later.